Hello, everybody. Welcome to the Plus Three Futures and Commodities Show. We are recording here on Saturday morning, April 18th. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. How we doing, Barry?
I don't know, Ben. I'm doing pretty good, but I keep thinking like, what a week, what a week.
Yeah, it's crazy, crazy, crazy. Well,
Yeah,
listen, after nailing the low, with our
right
good
here.
square that we had,
Hmm.
we didn't expect it to be this strong, like most people in the markets. We didn't expect it to be this strong. And dramatic moves like this beget dramatic moves. So today we're
Absolutely.
going to talk about, some of the setups we're seeing. Bitcoin, as we discussed last week, held an important level and rallied along with the rest of risk. So we're going to talk about Bitcoin and what to look for this week in terms of those levels. I'm going to cover cotton and cocoa today, commodity wise, and Barry's going to do his regular trip around the markets and cover the key levels. But the theme this week, in addition to the dramatic moves, is last week we were talking about how the bulls and bears were sort of agreeing, trying to find a peace, and sort of we were at key levels and see what happened.
Yep.
Well, the bulls chose to break the ceasefire and chase the bears, right up a tree.
And then the branches are getting pretty thin up here.
Yeah,
No?
yeah, and it's a big bear, right? It just
Yep.
came from hibernation and had its winter fat on. So on those thin branches, this week we're going to know, or try and discuss like when are the bears going to come down, and when are they going to put up a fight? Because I
Right,
think
right.
that's the next big question. So you can see why visually when we're looking at your S&P chart there, we can see where the bulls said, "Okay, boys, sorry, no more peace. We're fighting." And they pushed right through that 270 level and resistance. So, what do we see next? What are the important levels next? Let's get into it. Oh, and
Yeah.
don't forget, if you like what we do, please subscribe, hit the alerts, share the videos with your friends, and we really want to grow the channel. So the only way we do that is with your help. So if you would, kindly subscribe. A lot, probably 50% of the people are watching, but they're not subscribing. So make sure you subscribe. That helps us out. Doesn't cost you anything. So we appreciate the support if you could do that. Let's jump in now, Barry. Let's talk about this S&P 500 and what are the things you're looking at this week and the levels you're watching.
Well, you guys, one of the things, the reason I cover a number of charts instead of just stopping S&P, at the cash chart and moving on to bonds, is because by looking at it, it gives you a much better foundation of what's happening. That's part of the theme, that's part of what we do for ourselves, and we just share that. And today, by the time we get through the indices, I think you'll have a much better idea of like what to expect next week and probably the week after. Last week, I made a point of these three bars, little island here. And I even found another analog to that back in what was it, 2025,
Yep.
how we had a similar pattern. And the deal there was, if the pattern was working, obviously we should reverse and just, at least get a reversal off of that high, because we had the Rebel Yell cycle hit exactly on that day as well. Well, what happened was we got an outside reversal and boom, coming off the Friday's bar. So one thing with Rebel Yell and most cycles is if the right cycle doesn't hit in the same in the opposite direction, it's probably going to be an expansion, right? So in this case, it was an expansion and a good one. As for the reversal, obviously, if you get outside, as soon as the high gets taken out, that entire thing is out of the question. And we were able to maintain the level, right? We talked about this. This is why we use levels all the time. The 6800 level, 6807. We have to sort of hold above that. If we can't hold above it, then look for weaker conditions. But if we hold above that, then at least a test of the highs or a test of the next square, which was 6988 right there for the cash. So not only did we get a reversal, bang, bang, gapping up right into the thing, right through the square and then some. Very strong week, unbelievably strong. And I kept thinking like, wow, what a strong square that was when it came in. And we'll look at that in the June contract, go through all the entire set. All right, so now, now what do? We just trade the trend, right? There's nothing to fight here. 69, 88, 86. becomes support. So we have to look at that. That's going to be the key level to watch. Punch that in right there, 69.86. I would say long as we maintain above that, hold above that, we're in really good shape. And I would imagine, we talked about this overhead. We kept talking about this overhead, like, hey, the 6,800, this block, right, that we put in for the last couple of months. It was so much overhead, how it's going to absorb all that. Well, it would take this kind of event. I mean, look what it took, like a brink of all kinds of disaster in order to, and recovering from that in order for price to get through. And it got through. It's amazing what it takes to get through some of these things. Now, the fact that we're up here and I don't know, untold amounts of billions and trillions got poured into the market. Now, it's either do or die kind of a moment, right? We're going to continue to look at the charts because these charts have helped us get through pretty much everything that news and world events and market conditions have to show us. So we're going to stay with the same thing, same approach, right? Looking at that, I have to tell you, once we clear a level, the next level we look at is the halfway point, and that's 63.50 roughly, right? It was 63.48, 46. So that becomes the next resistance, really. Sure, we have a quarter square here, and S&P is famous for stopping at a quarter, and that will be 71.66. It's possible we stall up here, 71.66 area. We'll do a little correction and then recover, right? So we have to watch that. Now, a correction doesn't have to stop exactly there. We can come halfway into the old consolidation and still be very healthy. Normally what I do is, you guys, I take the consolidation, I take it, about the halfway point of that. And if we can hold above that, we have to deem it being fairly strong and the trend being able to hold on to the momentum. But in this case, let's play by the lines and the levels we have. So 69.86, if we can hold above that on any kind of a correction early part of the week, I would say, we definitely have room to go up and test 73.50 level. That's one thing, right? We have to remember that. So 73.50. Okay, there you go. Now, things that aren't always textbook, like when I'm reading the charts, and Ben, both of us, were reading in sort of classical sense, right? This is what ought to happen at these levels. This is what normally happens, and what's most probable from looking at these things for decades. But markets aren't always perfect, so it's not like we have to get to 69, 88, 86, and we have to bounce exactly. We're looking at this area for it to hold. Now, what's more important is we don't want to get stuck below that. Obviously, we want it to hold above if we want it to go higher. That's normal, any pullback, on we go. But if we get stuck below this, that's a whole nother story. That puts, just like, we didn't get below the 6,800 level, 6,807. So what happened then? If we don't get below that, if we can get a hold above it, then we run. So it's a binary. And it's the same story here, 69.86. We want to make sure, if we're bullish, if the market's going to go higher, we want to make sure it holds above that. Or like I said, it can even push down, like in a morning sweep, to about 50% of that range. But we have to recover, right? So 69.82, we have to recover that. So yeah, sure, we can go down to one day or dip in the morning or in some news, but we have to recover that and settle above it. So that's the key for next week. Watching the cash, 69.86 is the key level. If we're above that, we can certainly keep going, right? I wouldn't be trying to sell this at this point because we're on fire. Now, if we pull back and we find support, great. It'll probably continue higher. But if we pull back and we get stuck below 69.86, I think then we have a problem. So watch for that. Ben, you want to add anything into that?
I think the key, as you said, is on any pullbacks, holding that support either at the full square or in the middle of that consolidation is key.
Yes, and the other part is, getting stuck, right? And you can even draw one by one off the highs and whatever we have to do. But basically, we get stuck. That's the red flag or yellow flag, at least. All right,
That'll tell us the bears are fighting if that happens.
Exactly. Bears are up there clawing.
Yep.
All right. So remember these levels, right? Remember the levels from different charts and write those down. And it's okay. Now move it on to the continuation chart. This is the futures market. And here, 70.39 is the level at the full square. There you go. So what's the deal? Same story. We want, ideally, if the markets are really strong, we want price to hold above this level. Sure, we can get into, honestly, we can get into the 1/8 all the way down to 6,900 and still be bullish, but probably not not if we slip through that, because that's a 1/8. That's a decent correction, the kind of the move we had. But if we're really hot, we're going to continue this on and set another couple of other records. We want to hold above the 70.39, or if we get to 116, maybe 69.70, this area would be okay. Again, like I said, the technique for next week is really not about what's breaking. We want to see what we can recover. Now, if we could dip below that, no big deal. We can get down to the 8, no big deal. But we want to see a recovery above 70.40. If we can't recover that, I would say, we have a longer correction off of this leg. All right. So that's the key for the S&P. Let's take a look at the June contract. Now, this contract was perfect. This is why we track the front month separately. It gave us a square, 90 by 45. And I even drew up that little shady area zone and said, ideally we ought to get the low in here. And boy, I had no idea it was going to go past the 50% so fast. And well, we did. And we were actually, because the highs came in so well, we were looking for a lower high because the highs were very good. They came under very big cycles. Now, a couple of things to remember here. This is me reflecting on this. When a high is that good, you expect some kind of a correction, and we got a 45-day correction, which is normal, decent, good correction, and it squared out. Tells us price and time balance. Now we're ready for some kind of a recovery. And if we didn't get a lower high, well, this is a whole new cycle starting. Now, there's a couple of things to keep in mind about a new cycle starting coming off of a square. Given and also looking to your left, right? You want to look at what other cycles came in relation to all of that. And when we get to the weekly, you guys will see what I'm talking about and how to connect these dots. If you want to have the bigger view, right? Like normally we go week to week, which is kind of how we trade. We're not really long-term traders. We're not looking for, where's the market going at the end of the year? We're really looking week to week. And if you guys follow us on X, we track it basically every 30 minutes. And these tools work really well. But it's good to keep an eye on the bigger picture. So the bigger picture here is when you get a square and a blast out of there like this, with a huge cycle that came in at the early part of this year, you have to wonder, if that's over, or is this some kind of a larger false move that we're getting? So that's the other possibility, right? We could end up going into a false move and then sell off, because we do have an expanding triangle setting up. Now the triangle expanded even more. How do we, and I'll show you that in the next couple of charts. So from here, a couple of things. Yes, we got a good move. Second, the consolidation here and the counter trends will tell us the quality of that move, right? If we're going to go up for 90 days or 45 days, or is it some kind of a quick thing that's going to fizzle out? We'll have to see. That we take week by week, but by looking at the levels and the price action, we can glean a lot more, right? All right, so that's the idea here. Now, looking at the June contract, ideally we want to hold above 70.97 is exact where I have this square. But if we can hold above Friday's low, I think we're pretty good. That's a strong level, right? We looked at the other couple of charts. So we're okay if we can hold above that. I'm just going to use Friday's low, because if I reset the square to the low, it's going to come up a little bit lower. So let me reset it now that right? So Friday's low just happens to be 90. And the important thing there was, we held that exactly and ran up. What else can it mean? Well, it could also mean if we can hold these levels and continue to rally, we have 72.50 as the next quarter level. And not that we're going to get here before June. We could, given how fast we got up here last couple of weeks, we could get up here. But 74.36, remember this level, okay? This is going to be a really important level if we just break out and go. When we're melting up, there's no way to stop these things. And it's very difficult to find the exact high, but we can when we get there, right? It's hard to predict it beforehand. When we get there, we can tell, like we've done all the other corners, up here, down here. You guys know we catch those, but it's hard to predict weeks in advance or how it's going to get there. We can catch it in real time though. Anyway, that's pretty much the high, I think, if we reverse this and go where we're going to go. And that could be not just the A high, it could be D high, because we do have a bigger cycle, monthly cycles in here this year. All right, so that's that. Ben, you want to add anything to that?
Like that 90 level and what is that 90 level there? That's a good marker for whether
70,
this thing's gonna
75, 70, 75.
yeah, whether that's gonna run or not. That's a really good level to
Yeah,
watch.
let's watch that. Well, yeah, we're going to see if we can hold above. Again, same rule
Mhm.
applies all around. We want to make sure we don't get stuck below it. So I keep repeating that, but just to make sure that it's really important that we that you guys watch that, because that's the only way to know what's happening. Here's a continuation chart coming off the same April low, calendar day chart, and here we got up to the next square, pretty good. Let's see what happens. But more importantly, basis this chart, 7,005 is a level we want to hold above, and also not get stuck below. Taking a quick look at the Nasdaq, very interesting. I remember just talking about 25 140 just like last week, and it was. And look how fast. Look at that speed. For next week, 26,573 is the key level I'm watching, because if we can hold above that, obviously we're going to go and tap 180, which is way up in 28,000 area, right? 28,036. But Ben's going to do full coverage here, so we'll see the weekly charts and how everything lines up. But that was a heck of a move coming off this 2330 level, which came in exactly perfectly. Okay, let's take a look at the Dow, the one that's been a little bit shy this round. No new highs. So 49,484 back in play, you guys. We were watching that for a couple of months, early part of the year. So this is back in play. We want to, if we can hold above, obviously, go up and take these highs out, and maybe even go up and visit 51,800 area. If we can hold above that, obviously, right? If we can hold above, we can move higher. But the key thing to watch is that we don't get stuck below 49,848. So that's a key level to watch, and we'll go with that. If I have any other charts to cover, no. Let's go look at the weekly cash coming off the 2020 lows. This was kind of a big deal, and you can see how that's the level where we stopped, 7,009, right about there. And well, I had drawn this expanding triangle before it broke, and we broke to the downside. And normally when expanding sort of triangles break to the downside, there's kind of exhaustion that shows up at the break, because we took it out by so much. Now, I don't want to make this into a big deal, but I'll just draw the lines just in case. But I feel like the pattern is still there. We haven't, it didn't go away. And even if you go higher, obviously I can move this up a little bit more, but not forever. It'll all depend on the quality of the counter trend, right? That's always how I'm looking at this. But for now, we actually have a good expanding triangle with good geometry built in. So let's keep an eye on that. All that means is, we can pull back to about halfway of that megaphone sort of pattern and still be okay, right? And that would be the sign that we're going to go higher. We pulled out to the halfway, we slip below and retest and fail, then obviously we're going to go lower. So I'm just adding that for future. But for now, obviously, last week's bar, if we reverse that, we take out last week's low, we have a big old weekly reversal in play. Other than that, the 7,009 is still in play. As long as we can somehow hold above that, I think we're going to be okay. Next, so the weekly resistance I see is around 72.40. I know it doesn't match up with some of the other daily ones, but 72.40 for the weekly. And what's interesting is that 7,400 that showed up earlier, like this is the max, what I'm thinking would be the move, 74.90. Yeah, we go week to week, but I told you this week, it'd be good to take a look at the macro view. It'll go a little bit out longer, right? So I think if we can make that, we're going to hit the 50%. We're going to run up to about 7,400, give or take a few points. But that's the direction. It's not going to be, highs anywhere in here. I think we're going to go all the way.
Hey, given that expanding triangle, Barry, isn't that when it occurs at highs, isn't that a topping pattern?
Well, it's a huge distribution pattern, right? So that it's possible that's what's happening. And I thought this was distribution, and it was. And then, I mean, it's everything. Every time what happens is, people, we get some kind of distribution, we drop down hard, they come and buy the dip, and we run. Same thing happened here. Big distribution period over here in 21. So it's normal to see that, right? So this seems like we're just playing the same thing, except if you notice, the dips are coming closer and closer to the highs, right? So there are some changes taking place. I think ultimately after the next, let's say the real correction, will probably go higher, but we're just focusing on this leg and the leg to follow, right? We're just looking at the next two legs, not any more than that. Just make it technically feasible. So the 7,000, 7,009 level, this is where we want to watch. If we stay above that, 72.36 is sort of the next level, which is also the quarter square. You get through that, we're going to go higher into 74.89 area. So that's what's up on the weeklies. Then we get to our circle chart, which I can't believe got pierced. Hey, these are the times. But that's a good telltale sign, right? So
it took a move like that like we've seen to do it too.
and
That was
unbelievable.
power.
Yeah. And this little square alone couldn't have done it. But I think I'll tell you what overpowers technical analysis. It's money. If enough funds can flow into something, we're going to be in really good shape. And that's what happened, right? You can see what funds can do, flows of funds can do. So here on the weekly chart, 7,007 is the level we're watching. If we can hold above that, obviously we're going to go much higher. 7,500 is not too far away, but I think our target will be, based on this chart, which is coming off the low last year, I would say 73.68. Now, you guys saw all these targets are on 7,400, 7,300. Yeah, they're a little bit scattered. They're not all the same exact number, like 74.50. But the idea is we want to see that, hey, there's something getting pulled up. There is a sort of a strange attractor up here. And which chart will show up the best at the end, we don't know. But that's why at least I track a few different charts, because over the years I've learned, different charts take prominence at different time phases of the market. So you want to have them all up so you can switch to the correct one. And this one will be just fine. But the fact that we broke this is unbelievable. Either this is the biggest head fake or we're going to go higher. So I'm betting that we're going to go higher if we can manage to hold above the square, right? So the 7,000, 7,009 level becomes really important. Otherwise, like I say, there's perfect markets and there's a normal noise-filled markets that we get. So it's possible that we come right back down next week and somehow get stuck below this and put a whole nother new pattern that we haven't seen. So watch out for all that. So the theme so far, you guys, have been about, watching for not just pullback support, but also resistance, right? Can we recover that after the pullback? This is a good chart. This continuation weekly, really important chart from coming off the 2020 lows. Here, this is what gave us a lot of confidence, right? We can see the low came in exactly at the square level, and the bounce went right up to the next one. And that next one is 71.92 here on the continuation chart. Well, we did this in 3 weeks. And if you just look at the last square, we spent more than 6 months just playing around in the square. 6 weeks, 3 weeks, getting from one into the other is super strong. And I'm not sure how much longer we can hold up, but let's see. But looking at this again, look, guys, 69.79 is the quarter square on this weekly chart. So on weekly basis, if we can hold above 69.79, I would say we have enough juice to move higher. Obviously, if we can get above this 71.88, we are moving higher, and the 50% level coming off of that is 7,600, which seems a little bit tall for me. So I would go for the 8th, which is around 74, about 74.95, 97, right in there would be a good target because it's showing up on some of the other charts as well, right? We'll roll with that. But for now, because of that perfect 3-week move, we really want to see Fridays. We can settle above Friday's highs. Okay, that's really, really, really important to watch for any continuation. And like I said, any kind of a pullback, as long as we can hold above 69.79, market's in pretty good shape. Otherwise, if I get a correction, of the 50% correction comes down to about 765 level. So that's the weekly. All right, moving on to the Russell, take a quick look. We talked about this 2617 last week and saying, hey, if we can get above that, we're gonna move higher. If we get stuck below that, we're gonna go lower. And the reason we use this binary is because it actually works. And you can see, we went down last week for a little bit, dip, recovered, and then moved right up. So 2831 is resistance. Let's see if we stall there for some kind of a pullback. If we pull back, holding above this is great. Otherwise, getting stuck below will be negative. Okay, that's how we're looking at that. Now let's move on to the 30-minute chart for the 30-minute fans. Well, what a week. What a week. Well, what happened was I changed the squares. I'm using a new set of levels, so it wouldn't be a continuation of last week. But basically, 69.39 was a level we had to recover. You know how we go with level to level, right? So basically, we recovered that, moved to the next level, which was 70.12. We recovered that. Next level was 70.83. 71.56. Basically, we jumped from level to level because we can see how we held the level, recovered, level held, recovered, jumped right over the level, and now that level is holding, which is pretty bullish. So for next week, starting out, we want to watch the 71.56 is the key level to watch. If we lose that and lose 71.25 is really the important level. I think if we lose 71.25, we can expect some kind of a bigger correction. Maybe even down to 69.39, maybe 70.12. So depending on the level that we hold, it'll tell us the strength in the market, right? But those are the key levels to watch. For the upside, if we hold these couple of levels up above 71.25, we can easily run up and tap 72.28. And if we can recover 72.28, we're well, now those targets we talked about on the daily becomes a reality, right? We're much closer to tapping those. In the meantime, it's a critical time because we just broke out. And how much money do we have left to get back, pour into the market, right? And good news to keep this going. We don't know, so let's watch the market. So 71.25 is really important. Watch that as a major pivot for early part of the week, and then the rest of it we already talked about. If you guys want, follow us on X. We post these every day, and Ben covers the Nasdaq every day, several times a day. So all those charts are there, you guys. All right, let's get through the rest of the charts. Moving on to bonds. Well, we're trying to track a little higher. Not much happening. We're still looking at a weak bond market. The longest or bullet is 116, 15, 116 and a half level. And the next support level is basically the lowest that we had, last year. That's what we're looking at, and that's really the decision point. For now, we're just sort of adrift, but adrift sort of with the pressure to the downside. Pretty much the same thing. You can see the weekly resistance is around 119 and some change, 119.12, 119.15 or so. And as long as we're below that, big battle line was 114. You can see, we are just kind of sort of struggling. The last 3 weeks, we've been kind of poking around it. So building some kind of sort of test that area. The reason for all this issues or the sort of the grind here is because we have a lot of overhead to deal with. And usually it's some kind of news that helps break that, right? So let's see if that happens, or we just grind through and roll over. So let's see what happens there.
I mean, you can see on the weekly, we just been drifting since 2023, violently sideways.
Yeah, absolutely. And that's gonna break here very soon, but we just
Yep.
have to, we'll just have to wait for that. And if you guys want to see another view, we don't look at this chart all the time, but this is based on square nine levels. And you can see it's very easy to see we're really stuck with this 111.10 and 116.20 to the upside, right? The bulk of it is below that. Oh, 117.22. So this is where the bulk of the move is. And so long as we are in there, we're just going to be adrift. That's just how it's going to be. No way to get around that. And we'll continue to watch it and see what happens. Moving on to crude.
You say we're adrift, and we've been adrift for a while. The interesting thing is one of the commodities we're going to look at today, cotton, had been adrift for about 2 years, and watch the move. That's why we watch it. Watch the move
Oh, absolutely.
when we review it.
Well, crude, I mean, here's a good example, and we're just getting started. So let's see. All right. So looking at the crude chart, we talked about 97. If we can hold above this 97, 95 level, markets are in a very strong position. They can easily bounce higher, take out the 50% level, which is around 112, and go up and test the 126 level, right? So that was a strong case. Now, a case for getting stuck below, you can see that, we broke down, and you can see on Thursday, we couldn't really do it. We were holding 91, but we couldn't really break 90, 95, 97. So that's what I mean when I talk about the S&P earlier, right? We can break fine, but then can we recover? If we can't recover, then that's where the problem sits. So anyway, so last week, well, Friday, we came down to test the zone. This was the zone that I had marked, back in March. That could be the support zone for this leg. And we held above it. This time we came right into the zone. 79.50 is the key level. So I would say for next week, if we're holding above 69, if we're holding above 79.50, market's in a strong position still, not as strong as up at 95, 97, but stronger than it was at 65, right? So, well, the important thing here is that it's a 50% level. And I have a couple of levels here. That's why the zone came in. I have 79.50 to 83. So all three of those are key levels. So let's just take the midpoint, which is 81.50. And that's the level we're watching, right? We went to the extreme of that little zone, and we closed above the 50% level, 81.50, 82.50, just a buck. So let's see if this is holding next week. I think we can expect another test of the 97. That's the first thing. And obviously, if we get above, the story, if we get to 97, so there's a good place to take cover some longs. And from there, we'll have to see how the pullbacks hold after we get there. Obviously, if we break 81.50 and we get stuck below 81.50, then we can expect, 73.50 is really the next stop before we go lower. So that's a bracket. That's a bracket for crude. And if we look at weekly crude, basically, this is a new square that I'm working with. 78 is a good level. That's 72 degrees up from the lows back in 2020. And we broke above, went to the 50% level, this 115, and we returned back to 78. So this 78 area is going to be important if we hold it or not. If we hold it, the sort of the crude engine to be, warmed up and idling, right, ready to go. But I feel it looks like this is the first shot, and we pulled back, and let's see what other price action we can get. But long as we're above 78, it's not going to be business as usual. So I think that's the important thing to remember. Moving on to gold, let's take a look at gold. The reason we go with level is, as long as we're above this 45.67, we were looking for stronger conditions. We were above 47.50. It's even stronger. with 49, 29 becoming resistance, right? That's the range from the full square to the 50% of the square. Now, long as we're below that, I feel like this is still going on some kind of a consolidation, but a very positive one, right? Versus below the square. And if you can get above 49, 29, I think we can expect it to get to the full square, which is 52.96, and from there we can obviously move higher. But this is a critical area because this 49.29 is the key level to watch, because that's going to tell us where we are in the correction if you're done. If that low was the low, and I think we talked about that being okay. That low looked pretty good, at the time, and then I think you had a square that came in at the low. Or I know we talked about the ABCDs, but there was something else there.
Yeah, there was good square and an ABCD. And believe it or not, Crude did an ABCD too down into that low. It
Okay.
completed a nice Gartley pattern. So
Right,
to
right.
support your, bullish thesis above that 78,
Mhm.
it's all set.
Right, right. All right, so that's what we want to watch is 49.30. We can get above that, great. So I'm going to do the all the metals at once so we can save some time. Silver basically held the 72 level. We moved up to the 81 level. Now we're above, 81, 84. So if we can hold 80, 81, 90 is the next stop for silver. Let's see. Silver looks like, as long as we're above 72, you can see how it had more strength to the upside than downside. Well, it seems obvious, but the fact is we weren't looking for it we weren't selling anything, right? Because until we got to 81, see if we can recover that. After a couple of days, we recovered that. And if we can hold above this zone, then we can look for silver to get to 90 again. And copper, we saw how we recovered this 565. From there on, it was kind of bullish because next level was to see if we can get to the full square, 589 we talked about last week. We're definitely cleared that and pressing really hard against the old highs. So I think there's no reason to think we can't get to the 50% of the square, which is 636. And if we can clear that, the 589 area, the 613 level, we can get to 636. That's the target for copper if we can clear 13. And even if we pull back, this 589 is really good support now. So anything in this area is bullish. Copper is basically bullish about 589. Let me just put it like that. We're looking for it to go higher. Let's take a look at the weeklies. Here's gold. We managed to get above the 50% level, 48.08, 48.15 level. We got through. Well, if we can hold that, basically, I think all the way down to even 47.90 or so, if we can hold this level, strong enough to move higher, just like silver, So the metals are picking up. We battled here for a couple of weeks, and now we're moving higher. Pretty good. Next level for weekly basis, the weekly would be 52.23 to 38 level up here. Silver held the 50%. We talked about that, and the fact that we held the 50%, we reversed. Obviously, the next level is the full square. I have 84 here for the full square. That's coming off the lows in 2020. If we can clear that, I think we're pretty good to go on the weekly. So this is a big level to watch, 84, and any pullbacks holding above 75, 72, 75, I think is good. So that's the key level next. Key really the thing for next week is we've had 3 weeks up. 83, 84 level for silver, see if we can recover that, or if we can hold above 75, right? So that'll bracket that for the upside. Now, moving on to copper, we have 535 support. 535 held full square. We were looking at 593 being the next target. We got through that. So obviously, copper is going higher. 650 is the weekly next resistant level. And I think any pullback, long as we're holding about 566, copper's in pretty good shape. And I don't really see any squares or anything. I think we're just going to higher. Copper looks good. All the metals pulled up last week, Ben, if you noticed. So pretty
Yeah,
interesting.
it's part of that shift that I'll talk about with the commodities. We saw, money moving before. It was money was moving into the grains and the softs and out of the metals, and
Hmm.
it's reversed and gone back into the metals and risk.
but these are good times to buy those grains. So, so for the next round. All right, looking at Bitcoin. The Bitcoin worked out perfectly. 68,580 was sort of the pivot point we were watching for a couple of months. We had to settle that. And we started to settle it because we started to make higher lows, right? That's how you watch that. And dropped a couple of Gann lines and we were able to basically hold it, got above. And then now we're moving towards the big resistance is really between 79, let's say 80 and 83, that zone that where the old lows came in. Up until then, I think it's fairly safe. But once we get here, we have to really see if Bitcoin can take that or not. So we'll watch that and we'll look at the timing as we get there. We're not quite there yet, but that's what we're looking at, right? And as long as we're above this 68.5, 580, the trend is up and pullbacks can be bought. Moving on to the dollar, got a little weak in the legs. I drew this line last week, saying that hey, we have structural support here. It's basically okay as long as we can hold above that. Well, we of course typical, right? This is what I mean by textbook. Yeah, it should have happened here, but real market, of course, we dip a little below, then we recover and we close at 98. This is 97 something where the line is, right? So 98.10. Now, if we can hold Friday's low, I think we can drift higher back up to 99 area. But Friday's low, if we lose that, I think we're back to scraping the lows. Got to watch it. It's the critical level because of that is support, and it's structure wise. If we're going to hold this upside momentum, we want to be able to hold this. Otherwise, we're going to probably drift down another point or two before recovering. Point and a half, I would say. And the weekly charts tell a lot. So let's take a look at that in a minute. Euro went all the way up to the quarter square and struggled a little bit. This is kind of telling, this big old outside reversal down. So let's see if there's any follow through next week on the shorter time frames. And I would say, as long as we're below that 1790, euro's probably going to be on a weaker position, with the 50% level being the big support level. I don't really have anything between, and you can see the market really doesn't do anything between these either. We'll just go with that. All right, let's move on to the weeklies. The dollar first. Boy, this is looking like a chop zone here. Guess what else is getting a little expanding triangle? The dollar's looking a little expand over here.
Indeed.
All right. So,
Yep.
but all this just looks like what it really looks like is wholesale manipulation, but but it's okay. Looking at the chart, getting back to the levels, we came right into the zone that we've been working with for a couple of years, and we reversed. So let's see, if we can reverse out of here, okay, fine. Let's see where we can go next. And the good thing would be we had that big flush, and we have a higher low coming in. So long term, I'm looking. This could be a 1, 2, very simple 2, and then a 3 setting up. So that's the thing to watch for. So we'll see. That's the big picture. We'll see if we can get a reversal off of here, or if you get stuck below 97, right? If we get stuck below 97, we're not done. We'll have more scraping to do and some other nonsense. So we'll see. But long as this low is holding, there's hope for the upside. But it doesn't mean we can't. Now, the weekly euro, we did, we got the high with the false break, had a good break. This is the first lower high basis the weekly. So I'm basically here, I'm looking for reversal, just like the dollar. If we reverse here, then I think this high is good, and we're on the way to the third leg, the 1, 2. That could be the 3. Now this could be the 2 and the 3, and this could be the 4. Possible, but let's see. Let's watch this and see how it all plays out using the price action and the price level. The 1654 is a level to watch if we can hold above it or not, right? If we lose that, then I think next time we're getting back to our famous this 109 level. All right, that's it for that. I think I got through it all, Ben.
A lot to cover, and you did it.
A lot to cover. Thanks. Let me bring it back to you. Let's look at those commodities that are on fire, man. They're moving like cotton. Wow, Ben, what a chart. What a chart.
What a move, huh?
What a move, man. So I'll tell you what, though, that 22,000, the level came in, price came in, we had timing come in, everything came in at that low.
Yeah.
And yeah, it's nice to be able to call it. I would have liked it even more if we would have called new highs at the time, but
It it looked
just
like you said, we were going to go back to the 50% maybe into
mhm,
this a little bit and then roll over, but
right.
that was what odds favored. But this move negated all that.
Hmm. Best laid
So
plans.
yeah, that's
So,
right. That's why we
but
have
this
to
is
look
why
at
we, yeah, this is
price.
why we use it. Also, why these levels work, right? Once a level gets taken out, we know what to do.
That's exactly right. So this week we took out this big important full square level, right? This is 360 up from the 2022 lows. So it's a major level, 25,720, and we just kept pushing,
Yep.
right?
Yep.
And then I thought, okay, maybe we this is a little poke above the quarter square here, and we'll roll over.
Little
Nope,
false
pushed right
breaky.
back up,
Right.
kept going.
Hmm.
So now, I put in this quarter square is going to be the level, but if you really want to, zoom in on it, it's more this 26,337, right around these highs here. So, you can use this 26.3, 26.4 area as on pullbacks. We want to try and stay above that. We could theoretically go all the way down to the full square and still be bullish. But this would be super bullish as long as we stay above these, this area of these highs. And otherwise, we're going to push to 27,000. That's the next thing is half square. I
Hmm.
was working on some timing for NQs, and you can see this thing likes to do 45s, or the 45 to 49 is
Right.
the
Right.
leeway. But here we did high to high 46, low to high 46. Over here we did 48, low to high 45, high to low. So I said if we run out 45, it takes us to June 2nd.
Wow. Okay.
So we want to keep June 2nd on the radar for a possible low to high move. Doesn't mean we're going to, do this for, another month. Maybe there's some backing and filling, pullbacks, corrections, and the whole thing tops out, June 2nd. We'll see. We'll monitor that. But that's
Hmm.
that's just looking off of how we've done in the past, and what this in this bull run, what it's really like doing from a time standpoint. So
Hmm.
keep it on the radar early June. We'll see how it plays out. The next thing we want to see is what happens on these pullbacks.
Absolutely.
Do we stay on top of the highs? If we do, super bullish. Do we stay on top of the full square? That's again, very
Hmm.
bullish.
Yep.
So let's watch and see. Let's take a look at the weekly. Same thing. I had a circle that I
Hmm.
was really surprised got busted, but it got busted. So we want to watch now, watch the half square here at 25,932. Can we stay on top of that on any pullbacks? And if we do, then we're opening up, much higher prices.
Whole another world.
Yeah. I mean, you can see, look, what's very interesting, Barry, is though the high came right on the eighth square,
Yeah.
in this case, 5/8, but
Hmm.
it exceeded it by an eighth, and that's right where we stopped on Friday.
Yeah.
So it'll be interesting to see if we get on top of that, then we can push up to almost 28,000, 27,800. So we watch and see.
But I'll tell you what though, I have seen cases where, when you're working with circles where we can pierce the circle and then come right back into the circle.
If we do come back in, it's powerful. That's right.
Yeah. Yeah.
So we'll
Anyway.
watch that.
Hmm.
Here's uh here's also a monthly view. You can see we're
Wow.
tapping that half square at 26,796. But if we get, next month, if we push up and sit on top of it, it'll give us the emphasis to push up. Also, some timing here. 45 again. If we do 45 from the 2022 low, it takes us into July.
Hmm.
The weekly timing, I didn't go over that, but it also gives us here we do 60s a lot. You can see
Right.
60 here, 60. If we do 60 here, it takes us to June 6th. So again, that's early June. So
That's a
we've
good
got
lineup.
timing and yeah, things to watch there. We have to see how the pattern plays out, but we got to keep those things in mind. Let's take a quick look at Bitcoin. And I want to show you how important this 50% of the square is. Here we couldn't get above, stay above, couldn't get above, stay above, couldn't get above, stay above, and we were weak. As soon as we started staying above here,
Three
middle of
days
the
and
week,
boom. Yep.
and then look what happens. And
Perfectly
that's the
sitting on top of it like a couple birds, three birds
yep.
sitting on a wire.
That's the power of the square, right? When you have it set right, these levels are key bull bear levels. So now that we're sitting on top, the pressure's to the upside, and we could potentially get up to the resistance here at 85. Let's show you another view of similar issues of clearing resistance. So last week we finally cleared 70,646, and look what we did. We pushed
Yep.
up.
Yep.
Again, it's just we don't have to predict. We just look at what does price do at a level, at an important level, and then we trade the direction from there when it gives us the signal. Here's a look at the monthly. So now we're going to have third month where we're straddling that 74.5. So neither the bulls nor the bears have a huge edge on a monthly basis. Until we clear one side or the other on a monthly basis, this back and forth is going to continue. So no surprises here. Bitcoin is doing what it's doing, and it's doing it with respect for the levels, and that helps us. That helps us assess what the most probable outcome is going to be. So let's talk about the commodities. We're only going to cover a couple today because, as I mentioned in Barry's segment, money's kind of now that the risk on environment's back, money has moved out of the grains. It's moved back into metals. The softs are a little, choppy. It's not that they're selling off; they're just not moving like they were, except for our good friend and star pupil right now, which is
Let's see it. Let's see it.
cotton. Look at
Wow,
that
look at
week.
that. Look at that week. But how perfect.
I mean, we started last week where we were tapping the bottom of this full square, right? At 73.87. I said, hey, we really need to get over this and sit on top of it. And I hope you're starting to see this at a lot of these key levels. When a market's really going, it's going to gap over or gap under that level. And of course, Monday we gapped up and never looked back.
And
And we even
Ben,
close.
uh-huh.
Go ahead.
Now I was going to say, the whole thing here is you kind of showed it on the weeklies, how the breakout was showing up. And we talked about this pullback as it was coming, like what a great place to add because it was basically a retest of the breakout. Took out the
Here
50.
and
I mean,
here.
everything. This worked out to be textbook. Most markets don't. So
No, this is
good
this
job
is
on
like
that.
the dream, right? And,
Yeah.
and of course, you never have enough of the ones that go like this.
Yeah.
And you
Well,
have too much of the ones that don't work out.
no.
That's trading.
Yep. It's trading.
But
Yep.
anyway, this is the daily. I want to show you the weekly and the monthly, just as Barry said, because they're starting to come to life, right? But the main thing I want to show here and give you the perspective is look at this. This is almost 2 years worth of sideways, right? Sideways drift. It's why we pay attention to those markets, even though we're not trading them, because once you break these ranges, the moves are fantastic, especially in commodities, but in all markets. When you have a big base and a big sideways and a boring market, chaos follows that once you get the breakout. So here, we stopped at 79,996, which is, 7/8. As long as we keep pushing, 84.53 is next. And you can see historically why that's pretty important. So that's going to be the next magnet, and the next push is up to that level. Let's look at the monthly. And the monthly's come to life since it broke out. Look at that. I mean, look at how
Okay.
tiny all these bars were. Boring, boring,
Yeah.
boring, boring, boring. Since early 24.
Classic signs, right? Super low volatility, and we get the breakout. Like
And then
boom.
then it goes. And when it
And
goes, it
this is
goes.
and basis the weekly. This is just getting started. We haven't even had a single inside bar or any kind of a
Pullback.
pullback yet. Yeah.
No, not yet. So here, the key level on the weekly is just under 89, this 88.95. And on the monthly, you can see why that's been key. Stopped the rally here, supported it here, stopped the rally, stopped here. So this is going to be once we get above there, you get the launch, and then it's like, okay, just grab your profits as it spikes. Cotton looks great. As Barry said, we haven't had a weekly pullback or an inside bar, so there's room to run, and it's kind of stretching its legs as we speak. Okay, the last commodity we're going to look at quickly is cocoa. Cocoa did a nice ABCD up, and we've got to pull back off of that. Ideally, it would have been great if we could have sat on that. Friday, we had a pretty big down day. So we're just watching to see, do we make a higher low, right? Can we reverse, create a higher low, and then go? But this is sort of the first leg up off of that square. Now we want to see, do we get the higher low, and can we really, catch the big wave that's coming?
Yep.
Here's a look at the weekly. You can see we failed so far at that 34.14. That's going to be the key level weekly basis. We want to get above and stay above 34.14. Then that opens up 45.78. But the timing was there. The low was good. Let's see. If we make that higher low, we're good. If we don't, we step aside and go back to the drawing board and wait for a pattern to set up. Monthly, as you can see, we did make a higher high this month than last month, but we failed at the 3,600, which is understandable. There's going to be resistance there. Now we're just going to see, right? This one has to develop. The monthly is not there yet because we're early. So important week for cocoa. Want to see if we make a higher low than this early April low, April 7th low. If we do, we're in good shape. If not, it's back to the drawing board. And it may be coming down to do a false break or something else with this low. So we'll see, but we'll play it that way. And that's it on the commodities. The grains are correcting. Soybeans still sideways. Wheat and corn are pulling back. Nat gas is one I do want to mention. We had a square out at the low on the daily. That's on the radar now for do we make a high and a higher low and then a higher high? That'll give us on a daily basis, will give us the ability to go in there and have a setup to trade the long side. So keep your eyes open for that. So that's it for the commodities for this week. Just know that we're having corrections in the grains and the money's going into the metals. Nat gas is, trying to put in a bottom. Crude, we think, put in a bottom here with this ABCD down. So we'll keep you alerted on a weekly basis and during the week when we see money coming into them and good setups. But for now, focus on cotton, focus on the cocoa, and we'll see if we get some other setups. As far as the weekly show goes, please continue to share the videos, subscribe, hit the alerts, and help us grow the channel. That's our goal this year, is to have nice growth in the channel, and we can only do that through your help. So we appreciate the support and the help we could get from you. And we'll talk with you next week. Great job on the show, Barry. Really good job, covering the markets and the important levels, because it's a key thing, man. If those things hold, we're going much higher. If they don't hold, this could be one huge head fake move, and we'll see. We'll know based on price action.
Yeah, and it's really an interesting time because we could break either way from here. But at least for the end of the month, it looks like it could be positive if we can hold those levels. So that's the key thing to remember and not get caught on the wrong foot.
Absolutely. 100%. So take care, everybody. Have a great weekend, and we'll see you next week. Oh, and make sure you follow us on X, because Barry posts every morning. He's got a great post of the fuse line. For people that are interested in short-term trading, he's got a fuse line and a field map, which if you can use that and get a good edge there in your own system, man, it's a real nice way of creating an edge in the market. So make sure you follow us on X. The links are in the bio, and follow us, and you'll pick up the intraday and everyday stuff that we post, as well as be able to hear the weekly videos.
All right. Great job, Ben. And you guys get a good rest. We'll see you next week. Take care.
Take care, everybody.
Bye-bye.
Bye-bye.